Hey traders, Raghee here, and in this recap video, today's morning session where we were playing the clearing, which is a very specific time. It's a unique time to where it's almost this magical 90-minute window that is not necessarily designed to keep me in the trade all day. It's not meant to do anything other than give me some day trades that I can take between 9:30 and 11 a.m. Eastern. So very specific, we call clearing range breaches. Now, after the Microsoft and Facebook earnings, I really wasn't anticipating being short. I really looked at some of the intraday seasonal tendencies, the overall uptrend in the market, one that I don't want to fade longer term, and certainly one that I thought we could take some longer term day trades on in the morning. And yet the 8:30 data came out and the mood of the market got sour pretty quick. If you take a look at the way the market on the intraday 1 or 5 minute time frame sort of got really kind of sour up here at 8:30, that was the core durable goods number. Now, I won't bore you with all the numbers, but we could see how the market perceived that information and started to head lower. So by the time the bell rang, I'm realizing, oh my gosh, we're probably going to have to get short, despite the fact that we have gaps up in Facebook and in Microsoft. And I'll be honest, I think the folks in the room heard it. I hated the idea, but I have to trust my gauges and I have to trade what I see. And it was a really good lesson, I think, for everybody to say, you know what, okay, Rog, this is how this works. You know, we know that there's a very high chance that we could head higher into the remainder of the day, and yet we have this short that's setting up. And this is the image I love to look at on my desktop. Trust the gauges, trade what you see, and that's exactly what we did, with an expectation that we're only looking for an opportunity for the window of about 9:30 to 11, 9:30 to 11:30 Eastern, really max. So we get short, and that's what triggered in here. Now, when I don't like the breach, I don't trust it, what we do is we wait for the breach and retreat. This is a conversation that we had not that long ago. Breach and retreat. And what the retreat does is allow us oftentimes to cut the risk of the trade to our stop loss, sometimes upwards of half. We can cut the risk in half. And so that's what we did. So we took breach, retreat, and we did take some heat. But ultimately what happened? This market followed the breach direction, and we were able to have a very nice move to the downside across the NASDAQ, across the Russell, across the S&P, and even a little bit in the Dow. That was probably the one that lagged the most. You know, but they all gave us some shorts. We played the breach and retreat, and we were able to get a nice bit of follow through. But here's the real important part. There's something I call the Bermuda Triangle. And that's just this kind of action that happens between 11 and 11:30. And actually, it's really 11 to 1:30. I know that's not a good triangle, but that's the Bermuda Triangle. And I really look at what's called an eject button or a time-based exit, an eject button or a time-based exit. And in this case, it's 11 o'clock. If I haven't paid myself by 11, I really should. In fact, luckily, across all four of these, we hit different levels of targets. On Dow, it was 26,305. On the S&P, again, we had another downside target that we could be proactively scaling out at. I believe it's 2617. On the NAS, we were looking for anywhere as conservatively as about 78.10 to even 78.05, knowing that that major psychological level would probably have quite a bit of size bids waiting there. And I look at a number of volume studies so that as we're trading in the morning, I can actually see that kind of transparency. So we take the short, we take a little bit of heat and retreat, and then a nice move to the downside, all the while knowing that this is a trade that if we can take to about 11 o'clock, if even that long, right? We proactively took profits in this area, right? Everyone was a little bit different as to where they got out. And then by the time 11 o'clock rolled around, we were in break-even mode. And that's such an important part of this, gang. Once you pay yourself, bees and honey, as we like to say, we go to break-even. So if it happens to be one of those days where we'll continue to trend lower, and I'll use a volume weighted average price as the threshold, as long as we can stay below the VWAP on the intraday 1 minute, I might take this trade clear into the end of day. But that's not what was meant to be. So we go to that break even, we risk only unrealized profit. That was the day. A lot of traders were done by 11 o'clock. Great example of trust your instruments, trust your gauges. And I think that was really a big part of the lessons today. So I hope that helps. I'll see you in the next update.